Good morning, I'm Nagendra Rana. The topic of the day is industrial all risk insurance. Industrial all risk insurance. An industrial all risk insurance policy is a comprehensive plan that provides coverage against an array of risks your factory or industry faces during its operation. This insurance policy usually covers accidental damage, fire and allied perils, burglary, machinery breakdown, business interruptions. So, see, insurance is a vital tool to protect your business from unforeseen events that may cause hefty financial losses. It provides financial security and peace of mind to bounce back from a calamity. The industrial all risk insurance policy is different to the fire insurance. Even the fire insurance is also a policy that can safeguard your business against potential risks. So while both policies cater to multiple threats within the industrial sector, they differ in the scope of coverage and perils they address. So, as the name suggests, an industrial all risk policy is designed to industrial businesses such as warehouses, manufacturing plants, etc. It can be customized based on unique needs and risks your business is exposed to. So, an IR policy provides more extensive coverage than traditional fire insurance. Hence, large factories and industries prefer this type of policy. The coverage of the industrial all risk policy is divided into two sections. One is material damage section. The material damage section of the IAR policy wordings includes coverage against material damages caused to the insured property. Second one is business interruption section. The business interruption section of the IR policy offers coverage for loss of income due to business interruptions caused by a disaster that may lead to material damage. So, loss of profit due to a machinery breakdown is optional. While see the fire insurance is a more specific policy that covers damage or loss caused by fire and related perils. So it protects a wide gamut of assets such as building, plant and machinery, stocks, fixtures and fitting, etc. against fire, explosion, lighting, etc. Furthermore, the fire insurance also provides coverage for loss or damage caused by water, smoke, and firefighting efforts. So it is designed for a business owners, homeowners, and landlords to safeguard properties from damages caused by fire. If you want to see the difference between industrial all risk insurance and fire insurance, you will find that the industrial all risk insurance and fire insurance fall under the category of property insurance. However, there are key differences between both in terms of the extent of coverage and the perils they address. See how industrial all risk policy and fire insurance differs. Extent of coverage. In industrial all risk, it is more comprehensive, but in fire insurance focuses on fire risk and related perils only. Flexibility. IR policy is flexible and combustible and customizable, but fire policy not very flexible, neither it is customizable. Premium in IR is higher, but in fire it is lower. Risk assessment is highly exhaustive IR policy, but fire is not an exhaustive policy, not an exhaustive policy. Policy limits may be higher in IR policy, and in fire it is relatively lower. Suitability of IR policy is for businesses exposed to varied risk, while the fire policy is suitable for businesses exposed to fire risk only. Business resilience of IR policy helps businesses with continued operation, but in fire it helps businesses with continued operation at a small level. So IR policy is more comprehensive since it provides coverage against several perils besides fire. So this policy may cover natural calamities like flood, earthquake, vandalism, theft, machinery breakdown, business interruption, etc. On the other hand, the coverage of fire perils is limited to the fire and its allied perils. So industrial all risk insurance is highly flexible and customizable. You can tailor on IR policy according to the specific risk and need associated with your business or industry. Fire insurance, on the other hand, is less flexible and is usually standardized and addresses fewer risks. However, it can be customized to suit the requirements. IR policy comes at a higher cost since it provides broader coverage than fire insurance. However, the comprehensive protection offered by the industrial all risk policy makes it worthy investment if your business is exposed to a multitude of risks. So fire insurance premiums are usually lower since it provides coverage for a limited set of perils. The lower premiums of fire insurance makes it an affordable option if you own a small business with a lower risk profile. So industrial all risk insurance usually involves a comprehensive processes of risk assessment, because the insurance company evaluates several aspects of your business operations to customize suitable policy coverage. A fire policy also involves risk assessment. However, the process may not be exhaustive since the insurance company mainly focuses on fire-related risks. Industrial all risk policy may include higher policy limits since it protects a business from multiple perils. On the other hand, fire insurance may involve lower policy limits due to its restrictive coverage. Industrial all risk insurance covers a wide range of industrial risk. The comprehensive coverage of this policy contributes to your business resilience by ensuring that you recover and resume your business operations after a calamity. Fire insurance is also an effective tool in recovering from the incident. It can help businesses recover from fire-related incidents without interrupting your business operations. So picking between industrial all risk insurance policy and fire insurance depends on several factors. The nature of your business, the type of operations, and the extent of risk exposure can play an important role in making the right decision. Now see, the factory owners invest hundreds of crores of rupees in plant and machinery, raw materials, finished goods, buildings and warehouses. With such huge investments being made, factory owners should make every effort to secure these investments from the multitude of risks that are exposed to. So fire-related accidents can cause huge damages and setback a business back by years. The damages could be to the tune of crores of rupees and can also push the company into bankruptcy. An industrial all risk policy, also known as IR insurance policy, is an excellent tool for big businesses to protect themselves from fire-related damage and the consequential business interruption losses faced by the businesses. So an industrial all risk insurance policy is a comprehensive package policy which provides insurance protection against a wide variety of risks faced by an industry or a factory during its operations. It offers coverage against a wide range of perils Because as far as the material damage section is concerned, the material damage section of the IR insurance policy provides coverage against any material damage event to the insured property during the policy period. It provides coverage for fire damage events, same coverage of the fire insurance policy, and machinery breakdown events. So under section machinery breakdown, all this includes not only your conventional machinery breakdown, that is electrical breakdown or mechanical breakdown, but it also includes your electronic breakdown and boiler explosion. So additionally, theft and burglary are inbuilt covers in an IR policy, and transit risk within the premises is also covered under an IR policy. These are big advantages of an IR policy over a external fire and special peril policy. So the material damage section of an IR insurance policy is a combination of fire, machinery breakdown, electronic equipment, boiler and pressure plant insurance, and burglary. While the business interruption section says that the IR policy covers the loss of gross profits faced by the business due to the business interruption because of a material damage event faced by the insured property. So the business interruption section of the IR policy covers both forms of business interruptions out of fire damage, that is fire loss of profit, and business interruption arising out of machinery breakdown, machinery loss of profits, that is due to machinery. But this is optional. Now the sum insured under an industrial or risk insurance policy for fixed assets like plant and machinery, buildings, furniture, fixtures and fittings, electrical installations must be declared on reinstatement value basis, that is called RIV basis. There is no provision to declare sum insured on a market value basis, unlike an external fire and a special peril policy. So inventory stocks like raw materials, work in progress and finished goods are covered on market value basis in an IR policy, in same way as the fire insurance policy covers. But the minimum sum insured required for material damage under an industrial all risk policy is rupees 50 crores. Earlier it was 100 crores. Although some insurance companies provide set 50 crores. So the minimum material damage sum insured limit of rupees 100 crore can be for one or more locations. It means that if the insured has 4 locations, an industrial risk insurance policy does not need to have sum insured of rupees 100 crores or 50 crore for only one location. Even if the sum insured of all 4 locations put together is 50 crores, then also the insured policy is eligible to avail an IR policy. The business interruption section of the IR policy constitutes fire loss of profit and machinery loss of profit. So fire loss of profit is compulsory while machinery loss of profit is optional. The sum insured for business interruption section under fire section represents the annual gross profit of the company. The minimum indemnity period under the business interruption section of the IR policy is 12 months. As far as add-on covers of the policy are concerned, the material damage section of an industrial or risk insurance policy are very similar to add-on covers in a fire insurance policy. Say for example, removal of debris including of foreign debris, architect, surveyors and consulting engineer fee, spoilage, material damage cover, minor work extension, omission to insure additions, additions and extensions, escalation clause, deterioration of stock in cold storage, deterioration of stock in cold storage due to change in temperature by damage to cold storage or machinery, waiver of under insurance, designation of property clause, temporary removal of stock clause, group interdependency cover, lake outburst cover, OEM parts add-on cover, obsolete spare parts cover, terrorism cover, earthquake cover. It depends upon insurer to insurer. Because the add-on covers are always optional and depends upon the insurance company what number of add-on covers are there. Similarly, the add-on covers for business interruption section is also there. And they are failure of gas supply, failure of water supply, failure of electricity supply, customers' premises extension, suppliers' premises extension, prevention of excess cover, additional increased cost of working. They are all voluntary as per the choice of the customer. The number of add-on covers the insured want, he can select. None of them is compulsory. But of course, there is additional cost for each one. So now who can take this policy? Any entity exposed to the risk of fire incident can buy a fire insurance policy to avoid hefty losses. But related to the big risk like the FLOP, MLOP, burglary, for that purpose, it is always better to go for IR policy. Because comprehensive coverage for risk that an industrial unit faces, an IR policy provides coverage against a wider range of threats compared to a fire insurance policy. So it gives you the benefit of protecting your business against several risks and not only fire. So coverage for loss of profits due to the machinery damage is also an optional cover, and IR policy gives the option of securing coverage against losses caused by machinery damage, coverage for loss due to business interruptions. This is inclusive. Machinery damage is inclusive, but machinery loss of profit is optional section. So the IR policy is better for the risk where the sum insured is more than 50 crore. Thank you. Thank you very much.